Well, viewers, it's the end of the trading week, and what a week it has been. The US dollar has emerged top of the currency charts following the US monetary policy announcement. The Western heavyweight has dominated its peers following Ben Bernanke's confirmation that there is a timeline to tapering. But let's see just how this has affected currencies from the East. Andy G of Commonwealth Bank of Australia is on the phone with me now from Singapore to discuss Asian pairs. Andy, the US FOMC monetary policy announcement, as with all markets, has been the clear driver for Asian FX in recent trading. How have these pairs fared? And similarly, looking ahead, what will the drivers continue to be in the longer term?
The Asian currencies have been under downward pressure in general against USD strength. The weakening has a strong flavor of parent back risk as well, as high-yielding currencies underperformed the safe haven currencies. And looking ahead, we believe the monetary policy and the broad USD moves will continue to drive the currency market in this part of the world in the near term.
Starting then with perhaps the biggest loser following Ben Bernanke's speech, the US dollar Indian rupee. Moody's have today stated that India's weak rupee affects India's credit profile, highlighting challenges within the domestic economy. Would you agree? And how does this factor into your pricing forecasts?
Yeah, absolutely. The key headwinds to the INR remain in the short term. The monetary policy paralysis from elevated inflation continues, and the current account deficit doesn't show signs of narrowing. And last but not least, capital inflows are likely to remain volatile, exerting more downward pressure on the INR. So as such, we're looking at further weakening in the INR in the short term until these headwinds subside later of the year.
The US dollar Japanese yen was down slightly ahead of Bank of Japan Governor Kuroda's speech today. Since the closing months of 2012, the Japanese yen has plunged 22 to 33% against its counterparts. Analysts believe it is only a matter of time before the BOJ announce further stimulus measures. How is this priced into your expectations for this pair?
Further asset purchases will keep the JGB yields capped, which indirectly weighs down the dollar-yen cross. However, our dollar-yen forecast pricing more continued dollar strength and also a further narrowing to the current surplus, which is the key driver, in our view, to the yen weakness.
And lastly, looking at the US dollar Chinese yuan. The ongoing fall of this pair in 2013 has led to speculation that the central bank may continue to guide the Chinese yuan higher against the dollar in the near term. What impact could this have on both the domestic and global economy? And how does this shape your expectations for this pair in the coming months?
Well, the yen, the appreciation of the CNY so far has muted effects on the export sector. What's driving the CNY strength at the moment is both cyclical and structural. In particular, the yuan convertibility will continue to support demand for domestic currency as a reserve currency. That's why we're looking for further fall in dollar CNY to below 6 levels by the end of this year.
Andy, many thanks for your comments. That's it from me for the week. From all here at Dukascopy TV, goodbye and have a great weekend.